You're watching Bloomberg Television. Welcome to our show special, The Evergrande Effect.
Yep, and over the next half hour or so, we'll dive deeper into the crisis at the world's most indebted developer, of course, and we'll also look at the start of trade on the Chinese mainland and here in Hong Kong. But before that, let's get to your top stories today. Silence across the Evergrande issue here on interest payments, at least here due Thursday, is keeping investors on edge as authorities urge the company to avoid a default and also to repay retail investors.
Banks in China and beyond are racing to reassure markets about any fallout from the developer, reassess the risk of the economic and market contagion from the Evergrande debt crisis.
I'm Stephen Ingles, live outside the China Evergrande Center. We'll also explore how China's curbs on its property sector fit into Xi Jinping's Common Prosperity campaign.
There we go, just in time, 4 seconds into the last session of the week. The opening bell. Here's how we're looking across the Chinese mainland benchmarks. As you can see here, some marginal weakness really across some of these boards and indices. Let's wait for this to really get warmed up. Have a look at the open here in Hong Kong simultaneously, of course, and within that, we're also looking at the property index, very much in focus for very obvious reasons this week. You're looking at some of the tech plays, also a big area of focus here. Hang Seng Property Index down a third of 1%. We're flat on the benchmark. We're also flat on the enterprises index. Evergrande indicated lower, massive pop yesterday. Was that just a one-off short squeeze? Here's how we're doing across Evergrande and the various iterations of it. Plus, of course, we're looking at the bond itself. 32.72 right now is your last trade. We're looking at the banking sector here and the banking stocks. In terms of their exposure there, and just, I guess, a lot of ways this week has almost somewhat taught us really why a lot of these banks are traded at what, less than half times book. CSI 300 Banks Index here, 6,000 level, and very quickly a brief look across the property counters across the different areas of this market. A share at 8 shares here. Here we go, and some of the big plays, Fanco and Gemdale. Nothing much there so far. Yvonne.
Yep, and you got to wonder, we've been talking about how we actually got here in the first place, Dave, and let's bring you up to speed on just this crisis at China Evergrande. And we'll bring it back to a couple of weeks ago, back in mid-June or so, we heard about banks curbing lending. Then there was talks back in August about these asset sale talks. At this point, it seems like we're not getting much progress on that front. And then in September, China tapping advisors to examine Evergrande's finances, and potentially that was also seen as a way of perhaps we're getting closer to an end. But then there's a lot of uncertainty about these missed payments, right? 2 interest payments back in September of 20th. The 22nd, we saw a negotiated onshore bond interest payment, although they said it was off the clearinghouse. So there's still a lot of questions about how much has been paid, when are they going to pay it? And then just overnight, we've learned that $2 bondholders have not been paid their coupon as of 5 p.m. Hong Kong time on Thursday, Dave.
Yep. That's the key question, of course, for investors. Can Evergrande survive? And at least a bit of a nuance there. In what form will Evergrande come out of this? Stephen Ingles, our Chief North Asia correspondent, joining us right now, of course, as he was mentioning, right outside the Evergrande headquarters here in Hong Kong. Steve, that question to you.
Yeah, I mean, a lack of clear communication from Beijing, and also, let's face it, from Evergrande as well, adding to the uncertainty surrounding this indebted developer, the world's most indebted developer with more than $300 billion in liabilities. Now, sources have told Bloomberg News that Beijing financial regulators have informed Evergrande they urge them to avoid a near-term default on their dollar bonds, with the added emphasis as well, complete those unfinished apartments that are angering people, as well as pay back investors who invested into wealth management products to the tune of $6.2 billion. As you rightfully said, as of this morning, there's at least 2 bondholders on those dollar bonds who say they have not necessarily received their payment yet. Also, what we haven't gotten yet is any public statement from Evergrande on that supposed missed payment yesterday. They do have a 30-day grace period, but one would expect at least a statement to the stock exchange here in Hong Kong. But so far, no statement.
And Steve, walk us through what's been going on in some of these different units as well. Of course, they're trying to sell some stakes on some of their assets, like the likes of NEV, but there's some sources telling us that some of these workers are not even getting paid right now.
Yeah, that's right. There's a host of other non-core assets that China Evergrande, you would think, have been trying hard to sell through this liquidity crunch. One of them being this office tower here behind me at the China Evergrande Center in Hong Kong. Apparently, efforts to sell this property ahead of this bond coupon date yesterday failed to materialize. I'm sure it's still on the block, but so far no sale. But you're mentioning the China Evergrande New Energy Vehicle Group, which is their EV, electric vehicle joint venture. We had heard that they had tried to sell a stake in that, but also, again, negotiations fell apart. And we're hearing from sources now that some employees have not been paid more recently, and also, probably more critically for this company and its ambitions to get new revenue in as they're going to mass delivery schedule next year, they are not paying some of their suppliers.
Our chief North Asia correspondent is Stephen Engel. He'll be joining us, of course, a bit later on in the show for more updates. This is developing quite literally minute by minute here.
Yeah, let's bring in our chief China markets correspondent, Sofia Jorge-Costa, to talk us through just what we saw in the latest moves from the PBoC, another liquidity injection.
And that's the fifth working day that the PBoC injects liquidity in the financial system. A slightly smaller injection today, net 70 billion yuan. That kind of suggests that what's been happening in the past days has been enough to calm money markets onshore. You saw the overnight rate drop below 2%. That really shows that there isn't evidence of credit stress in the banking system, but the PBoC very much signaling that it is there to support China's onshore market if needed. And remember, we're not only in the middle of, obviously, this concern about Evergrande, but also heading into the quarter end when banks seasonally need more cash on hand, and also ahead of a holiday in China, a week-long holiday that starts in October. The PBoC just ensuring that banks have enough cash to see them through that period.
All right, Sofia, thank you. Sofia Jorge-Costa there. Just to set things up for us, our China markets correspondent, and investors and policymakers have been weighing in on whether Evergrande will become a global issue. Let's take a listen.
I don't think China Evergrande right now is a big brick on the wall of worry.
Quite unlikely to be a systematic risk.
Maybe overdone.
Definitely a lot of risks up on the horizon.
It's safe bet that the Chinese authorities want to actually go a little overboard.
Foreign bondholders, Beijing doesn't care about them.
This is going to be a major slowdown in growth here.
A bit of a correction, but not exactly a huge crash.
And investors are requiring a risk premium as a result.
All right, let's bring in a fund manager now with some skin in the game, Thu-Ha Chow, portfolio manager at Loomis Sales Investment Asia. She joins us from Singapore. Thu-Ha, thanks so much for joining us. Is this a sign for the market here after this liquidity injection from the PBoC that perhaps all these fears about contagion and a big credit event, we can actually see that could be the worst is behind us now?
I mean, I'm not so sure we can make that assessment because the market has its own emotion, its own mind, as it were. But what we can say is that it's very likely that this is not a Lehman moment. This is an action to avoid a Lehman moment, which is why we have to see this in the big context, what China is trying to do. And I think all the actions that we've seen so far seem to indicate that this is a controlled explosion, as it were, and very much with the view that to avoid a future contagious event rather than one that's likely to cause it.
Okay, well, let's move things along then, and let's look at, because we seem to be reacting to news day by day, and Mark, you see that in price action, you see that in high yield and investment grade. A week from today, China enters a very long, week-long holiday. Not that that is enough time to restructure Evergrande, even close to it, but do you think 5-6 days is enough for China to pull back this story further from the cliff so we go into that long holiday safe and calm?
I mean, I think you mentioned earlier in your program, it doesn't look like there is much panic onshore. And actually, even within the credit market, the Asian credit market and the dollar market, away from the property sector, there hasn't actually been much contagion. So I think, the worries, as a lot of people have said, is maybe somewhat more of a concern that what may happen rather than actually what we've actually seen so far. And remember, these bonds have been traded flat in the market for a couple of weeks now. So this is them not paying interest shouldn't really be a shock to people.
Yeah, to watch out there from Loomis Investments Asia here. We'll be sticking around. Lots more to talk about, of course, with her. Just to bring to your attention here, the Evergrande, this is the 8.25% dollar bond here that's due next year, indicated down about 1.7 cents. On the back of that, equities are also seeing some downside today with quadruple R. That's the ticker here, down about 5%.
All right, coming up, though, we're talking more about this Evergrande crisis, how it may represent a systemic problem across China's real estate sector. We look closer at potential risks for developers and the economy next. This is Bloomberg.
The Evergrande situation, it seems very particular to China.
This is all manageable.
Potential for second and third order impact, particularly on the capital markets and the bond markets.
Direct effect and direct exposure Evergrande is immaterial.
At this point, I don't see this developing into a global crisis.
I don't see this kind of loss of trust that actually brought Lehman and the whole system down.
Increasingly, China's problems are domestic.
There we go. A lot of the top newsmakers just chiming in here on the Evergrande issue. By the way, welcome if you're just joining us right now to our special here on Evergrande. If you're joining us on the television, to our clients on the terminal. If you're joining us from the internets, welcome from Twitter and Facebook. Very quickly, this is why it's a big story, a big global story. A lot of these big EM funds, and we've had a look at the numbers here, actually do have Evergrande in their portfolios, whether that's Ashmore and all the way to HSBC. In fact, today, on our functions for the markets, this is for our clients here, the headline is simply that Evergrande might actually hurt BlackRock funds more than it does, Yvonne, the Chinese system.
Yeah, and we've had some of these banks come through saying, look, the exposure is quite limited right now, especially the likes of UBS as well, HSBC. You dig below and under this whole Evergrande crisis, though, Dave, and you see that the credit problems are plaguing China's property industry. Developers have been building big to keep up with the country's property boom, and the sector now accounts for about 25% of China's entire economy. So the stakes are high. Let's bring in our team. Our Bloomberg China economist from Bloomberg Economics, David Chu, is here. Also want to bring in our Bloomberg Intelligence, a senior real estate analyst, Patrick Wong, for this. David, I want to start with you. Help us settle this debate. This is not a Lehman moment. Why is it not?
Well, I think we have several arguments on this. First of all, if we look at the size, Evergrande is big, but it's not so big as Lehman compared to the whole economy. For example, compared with the GDP or the total asset of the financial sector.
What is the direct exposure of China's banking system to these real estate developers?
Well, I think it's maybe.
We can ask that to Patrick, maybe. Yeah. What was your make of it right now when it comes to just the size of the pie?
Yeah, I think the for Evergrande is take up like 4 to 5% of the total market share of the developers, the 100 sales in China. So it's really a huge amount, right? Yeah, it affects lots of stakeholders, like the contractors, and also we have the home buyers, more than 1 million of home buyers. They have to take up the home on pre-sale, so now it's the risk that they can't get the products.
What do you see as the ripple effect to the economy, David? And what sort of drag do you think this could actually have on growth?
Definitely, it will be a drag to the growth, but it's still hard to make a clear judgment how big it would be, because many people are talking that it would be something to impacting the whole real estate sector. But I think what the government is trying to do is to insulate Lehman from the other developers in the full market, so that if this succeed on this means that the total impact to the growth should be limited. Otherwise, it should be big.
So isolate Evergrande. Goldman Sachs came out with this great note, King Lau, talking about just the impact that these tightening measures have had on China. They've introduced, I think, 400 new property regulations China has in the last year or so by local and central governments. They say tightening measures have already contributed 14% year-on-year fall in property sales. Patrick, what does this do to confidence in the market right now, whether it's home values, whether it's land acquisitions? What does this mean for the other developers?
Yeah, I think since last year we have the 3 red line measures on the developer side. We want to make sure that the government step in there to have a more sustainable developer business model. So for Evergrande is not that sustainable. You can see the interest cost is really high, and then now I think that when you talk about the tightening measures, it's quite a lot, right? And affecting the home sales a bit in terms of sales momentum. I think recently also with the Evergrande crisis, it make the situation even worse. I think September, October supposed to be a very good selling season for the home sales, but now even for September, it looks like a bit tough. So it start affecting other developers, especially the cash-rich developers. They are very happy. They can buy lands at a cheap price, possibly. But for those really high debt level developers, we have some like RNF, for example. It could be a bad situation for them.
David, what does this mean for policy now? We continue to see a 5th day of liquidity injection from the PBoC. Does this make a triple R cut more necessary than ever now?
That is what I cite. The government may want to insulate the Evergrande case from the whole economy or the whole property sector. So what I think that what the PBoC is doing is trying to stabilize the prism, the big picture. But for the Evergrande itself, I think it's many people are talking whether the government will step in. In my mind is how and by what kind of actions.
And what do you think the
debt
restructuring is going to look like?
Well,
is it more like an H&A? Is it going to look more like a state-owned enterprise? What do you think we're going to come out of this looking like?
Well, I think there are 2 extreme cases. One is to bail out by the government. The other one is to let it fall down freely. But I think it's a more likely case to be in the middle of the 2 extreme cases. It is, we call it orderly disposal. That means that the government give them some time to sell out their assets, to collect back cash and repay the debt as much as possible. So, but it needs time, right? It's more like a Baoshang or H&A group case.
David Chu, thank you from Bloomberg Economics, and Patrick Wong from Bloomberg Intelligence here on the overall effect on the property sector and the economy. Dave.
Absolutely. And just for context, right, 25% of GDP, about almost half of total government revenue comes from the sector. With that in mind, let's bring in let's still bring back our guest. You're still with us here, Tu-Ha Chow, portfolio manager at Loomis Sales Investments Asia. Let's ask a big picture question here. And certainly it does signal this pivot away from almost growth at all costs, building debt to simply just deliver that GDP number, whether that's at a company level or a local government level. Talk us through the biggest implications for the buy side here.
I mean, I think this, we love the kind of too big to fail slogan, but actually maybe the next one we have to think about is too big to ignore. I think what we are seeing is a shift that the impact of, I guess, businesses and companies have on the overall economy means that companies which could have systemic effect on the wider economy should expect more scrutiny and more regulations to ensure that they do not pose systemic risk to the rest of the economy.
Well, that's the other question, and I know we touched on it in the last segment, but I'd like to talk a little bit more about that, because the question really is how you unwind a system that's built primarily on debt. And the debt that we're talking about with Evergrandes, yes, it's $300 billion, but that's the debt on the balance sheet. That doesn't even include the off-balance sheet debt, which applies to the other developers as well, these wealth management products. How confident are you that China has the tools to lay the baby down on the pillow softly?
I think that I think their concern is probably even bigger than our concern. So maybe that's helpful to kind of think about. But I do think that some stress testing has probably been done. This isn't, and we've seen enough case studies of them trying to. I mean, I think what they can't control is sentiment, and that's what I think a lot of the liquidity injections, etc., and having other people prepared to kind of step in is there for, because I guess the contagion that maybe come from sentiment is harder to deal with than actually, ring fencing the financial risk that comes from this.
Tu-Ha, final question, just very quickly. In the event these keep well agreements are not honored, would that be a big deal?
I think we've seen that already, right? That there's a contentious from PQE. So I think it is a problem, but I think I do think that we're going to have a relatively good, sustainable way of actually dealing with this, and investors. Offshore investors should know that that the capital markets is important to China. I think you said the Southbound Connect capital, the capital market is still important to China. They just want to stabilize it.
Tuha Chow, thank you so much. Loomis Sayles Investments Asia joining us from Singapore. And Bloomberg subscribers can rewatch, of course, all the interviews of the day here, as well as the Evergrande Effect special by using our interactive function. Just check it out at TV Go. Plenty more to come. This is Bloomberg. Well, Xi Jinping's campaign for a more equal society has targeted several sectors, with property firms like Evergrande at the crosshairs as China clamps down on financial risk. Joining us is our Greater China executive editor, John Liu. John, we're just talking about a party congress that's going to be just a couple months away. What does it mean, this Evergrande crisis now, and how does it fit into Xi's political fortunes heading into that critical meeting?
I think it's all about priorities. Patrick mentioned this earlier. At the end of last year, there were about 1.5 million home buyers who'd put some amount of money down for an apartment but had not gotten that apartment because it had not been built yet. I mean, we're talking about families, middle-class families who put a big chunk of their savings down for an apartment. You know, Beijing's worried about a lot of things, contagion, financial markets, but that is the thing they are most worried about, making sure those families get their homes. You've seen that in the pronouncements from the government. You've seen that echoed by Evergrande itself. You've also seen it when it comes to interest payments to banks. Banks didn't get those interest payments earlier this week. Instead, that money is being used to make sure that construction happens, those homes get to those families.
John, the other question is, I mean, the complexity and just the makeup of this capital structure and be able to unwind it without really causing a lot of issues, if you will. I mean, some of the retail investors are being asked to take their payments in kind in the form of discounted apartments. I guess the question is, how do you ring fence? How does Beijing ring fence the social economic fallout from this, if any?
I mean, the financial aspect of it is actually easier just because of how much state control there is in China over the financial system. We've already seen protests from those individuals, and that's why I think there's so much worry in Beijing about the social aspect of this.
And Steve, I want to bring you back in and just talk about, as we end the show, what really comes next now for Evergrande. What should we be watching out for?
Well, yesterday wasn't the only coupon that was due. Of course, we have more coming up to the tune of $194 million in dollar bond coupons due before October 11th. We had 84 million yesterday, another 45 million due on September 29th, and then 3, bam, 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 on October 11th, totaling 149. In all total, that's 194 as part of $669 million in dollar bond coupons that are due by the end of the year. So they have a lot of work to do as well to assuage the concern of bondholders who at this hour have not been told that they've been paid yet.
Steve, to your point, we're just getting a headline right now. U.S. dollar bondholders of Evergrande have said they've yet to receive interest payment due on Thursday. Stephen Engel there outside the Hong Kong Evergrande headquarters, and of course out of Beijing there. John Liu, our Greater China executive editor. Let me leave you with a look at Evergrande shares. As you can see, and of course, markets on the mainland and here in Hong Kong. The first 30 minutes of the last session of the week, the Evergrande special. This is Bloomberg.